welcome Michael and Ben to FintechOS Evolve podcast. Thank you for being here. Ben, you are the founder of Covecta, which is the Agentic AI platform for credit and lending teams. And Michael, you are the founder of Vigilant AI Squared, which I guess is all about responsible uses of AI. So welcome to both of you. So I wanted to start with some context setting. And Michael, I'll come to you first. So where do you see AI currently at the moment?
Yes, it's been very interesting, right? The last couple of years have been an adrenaline rush. You can tell, right? AI has been around for a while. I mean, at least 10 years. But he had his inflection point a couple of years ago, right? I think the ChatGPT moment was the iPhone moment. But unlike the iPhone moment, I think things have taken a much more accelerated turn, right? And we've seen it. It's very interesting that it makes the main news. Just this month you had a variety of kind of barrows of big news that were coming and hitting the main news channels. Right? You started with Keir Starmer talking about AI and the government's action plan and kind of spitting out big numbers like 15 billion investments, 13,000 jobs, only then to be trumped by Donald Trump and second day in office, up in the podium there with Sam Altman and Ellison, and kind of talking about Stargate. I mean, again, what an amazing name that was, like in $500 billion investment and 100,000 jobs. I think so. And all of that is actually making headline news, right? You hear Laura Kuenssberg on the BBC spending half an hour talking about AI, and the main BBC News spending 10 minutes talking about DeepSeek, a company that nobody was even aware it existed, that has got a number of people just in China, again, making the stock markets drop and lose $1 trillion in just one day. So it is amazing. It is a adrenaline rush at the moment, and everybody is kind of scrambling to try and see what it means for them, I think.
Yeah, and I guess everybody, you want to translate that into financial services, Ben. So, we're an industry that are looking at best ways to use AI. So how do you see that playing out?
Well, it's been fascinating. I think by any traditional measure, AI has been adopted within financial services at light speed. It has proliferated across the industry like nothing we've seen before, including mobile, including SaaS, including cloud, and blockchain and all of the other innovations of the last 15, 20 years. And yet it is still very much, mission incomplete. We have seen countless reports expounding the potential of AI, both within enterprise across sectors, but within financial services. And in some respects, it doesn't really matter what the number is, whether you believe it's 1 trillion, 3 trillion, 6 trillion, or 9 trillion. Yeah. The point is the opportunity is huge. And you could look at any number of reports to find that. But if we look at 2024, we haven't yet begun to see the enterprise returns within financial services that we've been promised. Mm-hmm. If you look at BCG and Gartner released reports in Q4 last year that had the AI pilot failure rates up at 70 to 80% in 2024 alone. That is a staggeringly huge failure rate. 70 to 80% of the effort, of time, and the cost that's been put into piloting these AI solutions within financial services is failing, or it was in 2024. So the potential's huge, the promise is huge, but we're still really at the beginning, which seems, quite amazing to say, given the amount of hype and excitement that exists around this technology.
And I guess, where do you see then where the opportunity and some of the benefits are going to come from then? Because you say it's been around for a while now and people are starting to kind of roll their sleeves up, get deep into it. So where do you see that?
We say it's been, I agree with Michael's point on AI has been around, but I also agree with the sort of inflection point at the end of 22 when GPT was really launched. And it's staggering, that sounds so familiar to us now, saying it's been around for a while. That's only a few years ago. Right, so actually this is a relatively short period of time. The really interesting thing, I think, within financial services and the big unlock that we're seeing and us at Covecta are really excited about is this evolution from a chat function through to a co-pilot facility through to an agentic offering.
Yeah.
And really, in its most simplistic terms, what this means is these AI capabilities move from being a tool that completes a task for you, chat, through to a co-pilot which help you manage a variety of tasks, through to an agentic offering which completes workflow for you. So it doesn't manage it for you, it completes workflow for you. You move through to greater levels of autonomy. And that is really going to be a big unlock in financial services, because these agentic offerings now have the context required to really understand the specialized nature of the workflows and the activities that need to be completed in a regulated industry such as financial services. And with that, we're going to see completely new levels of productivity for the workforce, which has actually been a really underserved population as far as if you look at the advancements of technology in the last 15 or 20 years. And that's going to drive new levels of, we believe at Covecta, new levels of profitable growth like we haven't seen before.
Yeah, because Covecta, you are an agentic AI platform, and I know we've known each other for a while now. I know you won't say it, but your platform is going to be used, certainly it's going to have a massive impact in the origination space of banking. So why don't you talk through that a little bit?
Yeah, so part of I talked a moment ago about the specialized nature of work within financial services, right? This is complex work that needs to be done right. We're in a regulated institution, and we need to make sure that we're doing the right things by our customers. Part of our success has been due to our verticalized nature. We are completely domain specific, focused on the providing agentic AI capabilities to lending and credit teams within financial services, and within that, front and second line.
Yeah.
And the reason that's powerful, I lived through online becoming the new sparkly distribution channel, then mobile, and then online and mobile, and this thing called omnichannel. And then that created new customized, far more engaging experiences for the customer. And then cloud came along, which gave banks much greater access to their data and control over it, which enabled them to offer customized experiences to their customers, or personalized experiences to their customers. And that's fantastic. And banking for the consumer and for the business felt like it was such a different business when all of that innovation came along. But amongst all of that, large parts of the workforce were ignored. And within a bank today, even today, huge elements of the processes that the bank's teams need to complete are manual, they're time consuming, they're repetitive. And actually agentic AI gives us the opportunity now to serve that population at scale and at pace.
Yeah.
And that productivity drag that still exists today within the workforce inside these financial institutions is a huge drag on the overall performance of the financial institutions. So that's the bit that we're really focused on solving, the agentic capability within the lending and credit teams.
Yeah, I mean, having worked for a bank for 20 years, my mind starts to completely boggle about the amount of use cases that this type of technology can be used in. But Michael, I mean, you come from a different side of the coin around using AI in a responsible way and adopting it. So I guess for a question for you, how much of this hype is actually real? Are banks actually seeing returns?
We're looking at this in a slightly different way. I mean, kind of wider perhaps than what we've been talking about until now, right? Again, we see the opportunity of AI around efficiency and productivity and innovation to be coming from the individual people within any organization, and banks being one of the key areas that we look at, that would be able to automate their work in a way that they couldn't before, right? So we see it a bit like, because it's a general purpose technology, for us it's equivalent to end user computing. And if you think about what happened when everyone was given a PC and then the PC had Excel on it 25, 30 years ago, there was a huge amount of productivity that came out of individual people within the business that had limited knowledge of technology because they were not COBOL programmers, but actually could understand how to use Excel to write some visual basic scripts, and that they learned very quickly. And then they transformed a lot of the work that they were doing. They automated a lot of the work that they were doing as individuals. So we truly think that Gen AI is the point where, actually AI can be democratized, technology can be democratized in a way that every individual employee of a company, every individual person can actually create their own automations and do all the stuff that Ben is talking about, but in a very micro scale. We have this thing, Ben, you would have come across this, like we talk about the long tail of automation and digitization whenever we were doing big projects for all of the banks that I worked in the past. And that is basically a tale of a number of activities that each one of them takes a bit of time, but it's always very expensive to digitize because the amount of cost to digitize all of those small things wasn't worth it because they were not taking a huge amount of capacity. But altogether, they were like 40-50% of what a bank was doing.
Yeah.
I think this is where the big opportunity is. How can you actually enable each individual to innovate? But this is where the biggest problem comes, right? The biggest worry and the biggest fear is that as you democratize it and you give it to every individual, some individuals will not be able to use it in the right and responsible way. Yes, you might have policies, but we know for a fact that people, end up either not paying attention to some things and breaking things without really being conscious. We also know that some people are actually also consciously going beyond what they can. And I think that's where the risk is. And in banks, clearly that risk is bigger than any other industry, mainly because senior manager regime means that, senior managers could actually be put, taken to court and taken to jail if bad things happen. And I think that is the biggest impediment at the moment. So again, we are trying to see how can we address that? How can you remove those risks where you can make AI be used by everyone, but in a responsible, safe, secure way?
Yeah, it's a lot of money to remove an Excel spreadsheet because it'd be shocking how much people still use Excel to this very day, right?
Yes. Well, and also if you use Excel as a great example, right? What happened with Excel was people started to build all of those spreadsheets that had huge amount of automation and sophistication, but they were building them within the business. And then when a few years later, IT came on and started to go, well, we need to automate those. Nobody knew how they were working, but also they were providing a lot of value. They were not maintained. Now, again, all of those things, I think we need to use as lessons learned to actually do these things in a much better way.
Yeah.
The reality is that Gen AI has got so much more capability than those Excel spreadsheets.
Yeah.
That actually means that you can automate a lot of that even on top of what people do, right? How do you monitor?
Yeah.
How do you govern? How do you help them do it the right way? How do you maintain it? How do you discover all of that stuff? AI can also help you democratize it.
There's a market report out there that said by 2030, with the use of AI and the right use cases, banks should be looking at a 30% uplift in their profitability. So I guess, Ben, Covecta's going to play its part, no doubt. But how are banks going to do that around, I guess, customer service, efficiencies, operationally? What's your view?
Yeah, I mean, I think it could be that. It could be more.
I thought it could be a bit light, actually.
The challenge that we've got when it comes to, and it's a great question, right? But it's also a difficult question. The challenge we've got when it comes to forecasting where we're going at AI, we don't have the benefit of this sort of linear extrapolation process that we did in SaaS and cloud, where you can just forecast the pace of adoption. Because as we've already alluded to, the developments in AI have come in leaps. Right, we saw one recently with DeepSeek, right, where they pulled the rug from under the feet of some of the established players, and so we don't know what leaps are coming at the front edge of the leading edge of the AI industry. But if we look at what we do know today, actually, you don't have to squint too hard to picture a 30% profitability improvement. You don't. Even in Covecta alone, we're seeing an 80% reduction in time to complete tasks and activities. In the activities that we're supporting in the teams that we're serving. So extrapolate that across more of the portfolio, more of the sectors, more of the business units, and you start to imagine a world where the workforce within these banks are able to manage a far higher portfolio of customers or activities or tasks, which is efficiency straight out of the cost line. And then you look at the potential to drive top line growth. And what's really fascinating about, one of the really fascinating things about AI is actually, we're particularly with Agentic, we're seeing the opportunity for banks to make the customer service they provide in certain areas more human, not less human.
It's interesting.
Because these teams are less consumed with the time-consuming manual activity that they have to do historically.
Yeah.
Which means, let's take commercial corporate banking, which is an area we focus on really closely. Suddenly you can imagine a relationship manager being able to double their portfolio size, or indeed double the time they spend with customers on the same size of portfolio.
Yeah.
Because they have removed all of the other stuff that was taking their time. So
absolutely.
they can speak to the customers more.
100%, yeah.
It's not necessarily in all areas of FS just about removing the human. In fact, it's about making the humans do the things that are more valuable.
Totally. No, totally agree with that.
That's a really exciting play.
Yeah, yeah, that's a real good take. What's your perspective, Michael?
Yeah, I mean, what is very interesting, as you were saying, I was thinking about a couple of specific examples, right? Again, one of the first places where a lot of the banks and a lot of the companies across industry started to benefit from AI as a co-pilot was in engineering, right? So basically, a lot of the first POCs and pilots that a lot of the banks have done is to start to give their engineers the ability to use Copilot, GitHub Copilots in a lot of cases to help them improve their productivity. And this is high value work, right? This is engineers are probably the stronger and most expensive employee type asset that any bank and any organization has, right?
Yeah.
We were always struggling to find good engineers, hire good engineers. There was, a huge amount of competition going on in London and across the world. Now, suddenly those people can become much more effective in doing a lot of the tasks. And Ben is right. Initially, a lot of the productivity comes from things that engineers find mundane to do, right? The documentation, the checking, checking the code, testing the code, a lot of that stuff. Even writing some elements of code that are pretty standard, right?
Yeah.
And even with the AI that was 1 year ago, which again, if we say everything is accelerating 10 times, this was 10 times less good than it is now.
Yeah.
They were getting things like 15 to 20% productivity gains for the ones that were properly embracing it. Now, again, think about that, right? 15% was the productivity gain when the AI driving that was 4.0, OpenAI's GPT 4.0, which actually was scoring 10% in Code Forces, which is this code competition. 6 months later, O1 was scoring 90%. Yeah. And 6 months later, just in December, O3 that was announced, and it was scoring 99.5%.
Yeah.
So this AI that was enabling those engineers to be 15% more productive has now improved 10 times.
Yeah.
And the reality, what does that mean? People are saying, oh, this will be engineers will lose the jobs. The reality is that actually we could always do more development. Those digitization initiatives. If you told me that actually they will cost 10% of what they did, I would have done 10 times more. So the reality is that there will be a huge amount of work to be done, but in a much more productive way. And that can be applied in many other areas of the business as well.
It's interesting, right? Because we're talking about banks, and look, banks are banks. I'm a banker. I've been a banker for 20 years. So the banks need help, right? They're not going to become AI experts overnight. So I guess that ecosystem, that fintech ecosystem that we operate in now is really got to leverage their expertise to help banks. I mean, Covecta's a fintech. FintechOS is a fintech. We're here to help our customers, which are all belong in FS. So how do you see that banking fintech ecosystem now coming together, marrying together to make this AI journey together?
Yeah, look, great question. In some ways, the dynamic I don't think will necessarily change. Banks, certainly the scaled banks, the large banks have certainly for the last 20 years always adopted a sort of a blended buy versus build. Right? They build some stuff, they buy some stuff, particularly as we've moved to cloud and you've seen the disaggregation of the tech stack. And I think that will continue. The scaled banks are investing in their own capabilities at pace,
Yep.
at significant pace. Lloyds Banking Group here in the UK announced in November that they've got 3,000 ML AI engineers. So they're clearly building a lot internally. But they've also announced quite a number of partnerships. And we've seen that from other scaled banks across the main markets. But outside of that, many of the other tier 2, tier 3, tier 4, wherever you want to go further down the banking pyramid, actually they don't have the benefit of that. They don't have the benefit of being able to build it. They certainly, if they do, they can't build it quickly enough to keep up with their competitors. And so you see, a buy strategy being selected more frequently, and that's where you're seeing this proliferation of AI capabilities. Now, the question then from a vendor perspective is who's going to be the winners? And there'll be lots, right? Because of the broad and
it's big enough
complex needs of regulated financial institutions. Will it be the established SaaS vendors that are integrating AI into their capabilities, or will it be the AI native players? That's the interesting, question.
It's interesting. So, Michael, Ben said earlier on, I think you said 80% of most pilots didn't go right, or they ended up failing. So, clearly, no technology is perfect, right? So, I guess with your hat on, where do you see some of the risks of AI in financial services?
I mean, first of all, let's put that number in context, because there is the other classic number that has been quoted a number of times by McKinsey, that 70% of digital projects fail. So in reality, a lot of projects fail. And they fail mainly because they're being done within organizations that have got a huge amount of risk, governance worries, etc. And I think, I've seen many big IT projects and digital projects fail in my career, unfortunately.
So have I.
Yeah, and unfortunately, you kind of go more fail than succeed, right? You always talk about the successes because these are the ones that we're all proud of, but the reality is that there have been a lot that have failed, and AI isn't any different in a way, right? Because the reason that a lot of these projects fail is because there is a level of risk and governance and compliance that people are worried about, that means that, and they cannot easily overcome, that means that they get blocked and therefore they can't go live. And actually that's what's happening with a lot of the AI POCs and pilots at the moment. There's lots of worries, right? The two biggest ones that are very obvious, one is around data privacy and leaking customer information, company confidential information. That is a very obvious worry that people have. And the other one that is also very obvious is the whole worry about hallucinations. The fact that we know this new version of AI that is probabilistic is not 100% correct. I think though that what that means is that we have to get over some of those things.
Absolutely.
And the way to get over some of those things is to actually start to get comfortable that AI, Gen AI might hallucinate or might make mistakes, but there might be less than what a customer, what a person would do, right? It's a bit like self-driving cars, Tesla can prove that autopilot crashes less than humans, but that isn't enough for people to go and say, therefore we absolve you from that interest. And that is what banks are challenged with. So I think what we all need to do, and that's what we are working on at Vigilant AI, is how do you actually use the same technology to put the guardrails around the use of the technology, and not say it actually has to conform to the previous generation of rules. It has to be 100% right. Test it. Prove to me that it's right, because you accept that it isn't. And therefore you move to a continuous monitoring and continuous improvement. That means that as the technology is used, you capture things that aren't correct and you feed them back into the loop. That means that the technology will become better. At the same time, you ensure that humans are always involved and they help improve the technology, but also you monitor to make sure that those humans are not being lazy and not actually doing what you expect them to do, because that's another challenge. So these are the types of challenges that we see, which is a mind shift away from where we were to where we need to be now.
So from the gamekeeper to the poacher, right, Ben? So where do you see that balance being struck between banks using AI and ensuring they protect that privacy? I mean, I've worked in banks. I've chatted to many data protection officers who quite clearly are worried. They quite clearly don't understand how it's going to work. And these guys are personally on the line, right? So they are an absolute gatekeeper to that kind of usage of AI in banks. So where do you strike that balance?
Yeah, and Michael's highlighted some really important points there. Clearly, security, data privacy is priority number one in financial services. It has to be solved before you can begin to think about solving anything else and access this amazing pie of benefits that we've just been talking about.
Yeah.
Our perspective is that this was a concern that everyone was a little bit more uncomfortable about. Maybe 18 months ago.
Mm-hmm.
It is still priority number one, but we're seeing more FIs getting comfortable that it can be solved, because there's more infrastructure and optionality out there to privatize, compartmentalize, anonymize, monitor and detect, which needs to be done at all points of the process. And it's not a simple engineering task, but we are seeing more FIs comfortable with the fact that they can meet their thresholds there. So the next stage is, well, then where do they deploy it? Where do they use this technology? And that's where you've got to, financial institutions need to make really careful choices. We avoid at all costs at Covecta this black box.
Mm-hmm.
And the FCA has laid out their perspective on this as well. Explainability needs to be very, very clear. Observability needs to be high, and you need to ensure that you're avoiding the embedding of bias. Right. So that's how you train and prepare your models. So a large part of the solution here is, where do they deploy this technology first? Right. So let's take it away from any areas where we get really comfortable about black box decision making.
Mm-hmm.
Right. Let's support processes. Let's support efficiency. Let's support engagement. Much of the long tail stuff that Michael's done first.
Mm-hmm.
Build our confidence. Build the technology. Build the monitoring. The protection. The benchmarking, and then we can work across the rest of the stack.
Now you talked about. Go ahead.
Just to build a bit on that, because I think you're absolutely right. I mean, the basic elements of data safety, data privacy, data security, I think are now becoming more understood. A bit like what happened with cloud. We're going through the same curve, but much quicker. So I think they're becoming part of it needs to be there, but it's being addressed. I think where, indeed, one of the elements is exactly what you said, what you need to make sure about the models that you develop and how do you make sure that they're explainable and responsible. The other element comes to the democratization challenge that I was mentioning, right? If we believe that one of the main gains in productivity will come from individuals across the organization in a variety of departments using generative AI and general tools to automate their jobs, then the more complex challenge comes from, how do we ensure that those individuals use AI in a way that the use is compliant with the rules, the regulations, their job description. You don't want somebody going off and going, now that I can use this, I will use it to do something that is completely beyond the job remit that I have, right? Yeah. And I think that's where the complexity exponentially increases, because it's not a yes/no question. It's not, are you sharing PII data? I'll block it. Mm-hmm. It's the question that you're asking or the answer that you're getting is not compliant with either this regulation or with the remit of your job description. Yeah. So we think that is where one of the biggest challenges is. And then again, similarly, we're trying to see how we can address that element of monitoring and enforcement of some of those policies, rather than just the trusting people that will always get it right.
I don't want to trivialize this point, because it is absolutely critical. Within these financial institutions, it needs to be somebody's job to worry about this. Yeah. There needs to be an AI ethics and compliance officer of some sort. Mm-hmm. And it needs to be a significant part of their job, if not their only job. Yeah. If you think, and the reason for that is because this technology is going to touch every single part of the organization, exactly like Michael's highlighted. And we're not just talking about tens or hundreds of use cases in these big financial institutions. We're talking about thousands.
Yeah.
Thousands. I've spoken to a number of banks just in the last 3 weeks alone, where their to-do list under their AI capability or innovation roadmap numbers thousands of items. And therefore, some of those might be low risk, but a good proportion of them are not going to be low risk.
Yeah.
That doesn't mean AI can't help. It just means that AI needs to be applied responsibly.
Yeah.
And so that isn't a small task to figure out how to do that.
There's a lot of work for you there, Michael.
Yeah, well, but it is
lot of work.
right? Because I bet you, because I've been speaking to the same banks or similar, and what they tell you is the way that they're actually trying to make sure that this is done correctly is to look through each individual of those use cases centrally and trying to assess that it is a good way of using AI and then execute it as a project. Whereas in reality, what you really want is the individuals that have put those use cases into the catalog to be able to do this themselves, but in a way that you monitor it. I mean, again, you talked about an AI ethics officer. I mean, a lot of companies that we speak to don't have AI usage policies in place. Their initial reaction is, we're dealing with this centrally and we're banning use of those AI tools completely.
Yeah.
And what is happening there is that you have two things. One is what people call shadow AI, which is individuals still within the bank's networks and tools.
I can confirm that happens.
Yes, getting access to individual websites that are using AI. But we now have the equivalent of, I'm calling it the bring your own AI.
I can confirm that happens as well.
It's the equivalent of bring your own device, where people turn up with AI in their phones.
Yeah.
And the easiest way to use the personal AI is to start taking pictures of the screens and asking their AI to do their job. And actually that means that this is even worse for the banks, right? So what we're saying is you need to actually find safe and secure and responsible ways that you can allow your employees to access and innovate individually. That is not centralized governance. That is an old process, but it is continuous monitoring and continuous compliance and continuous governance, also using some of those Gen AI tools that can now help us bring this to life.
So we're talking about having expert people within the bank, proper policies around AI, an ethics board. We talked about anything else in terms of governance structure?
Yeah, so what we are saying is we can take these clever people and actually automate that task.
Yeah.
So create effectively compliance agents that you don't have a compliance team that has got 10 people centrally and everybody needs to go and check with them. You replicate those 10 people and you make thousands of agents that can actually continuously provide advice and guidance to every one employee that is trying to use those tools in a way that it is centrally compliant with your AI policy, but is distributed across everyone rather than centralized.
How far are banks away from putting this type of government structure in place? Because without this government structure, it's going to be incredibly hard to adopt many AI tools. So, in your experience, are different banks at different parts of the journey, or?
Yeah, no, I think they are very behind because they're thinking of this still in the way that they were thinking about digital transformation and technology projects. I think, in my view, a lot of banks for sure, but generally the organizations are still treating AI and generative AI as a digital project that they have to put on a backlog and prioritize and give to the 3,000 data scientists or their 10,000 engineers to solve, rather than find ways where each individual employee that is smart and can write some simple instructions using English in a structured way can actually do. I mean, I don't know, Ben, what are you seeing?
Yeah, I think that's exactly right. I can actually, I do think it's true that AI is being adopted within financial services at light speeds compared to any traditional measure. But I can also make a case that the adoption gap between the leading edge of the industry and what financial services are deploying is getting wider, not narrower. Just because of these leaps that we keep seeing at the front end. Now, there's a whole element of uncertainty and debate about how often these leaps are going to continue and the pace at which capability is going to continue to grow. I truthfully don't think anybody knows for certain. But one thing we do know is that there's still this huge adoption gap. So the banks are busy. They really are, and they're serious about this. I don't think anyone would be able to argue with that. But the task in front of them is still absolutely huge.
Yeah.
It just is. They are just getting started.
I guess it depends how forward thinking. I was with a CEO for lunch only last week, and we spent hours talking about AI, and he wants to embed AI, centrally within the business, and you can see already his mindset. And as I said earlier on, you kind of starts whirling around thinking how you can start using AI to take out processes and even providers, because AI will take care of it. So, but one of the things you said earlier on really resonated with me, and it's probably a worry within the industry, is AI is going to do all these things for everybody. It's going to be fantastic, and actually there's a whole human element that's going to be affected. And I read a stat, I've wrote it down here, which is from the World Economic Forum, estimated 85 million jobs will be displaced by AI, and that's a staggeringly large number and a scary and a worried number for a lot of people. But you started talking about earlier on how about the marriage and the blend of AI and human. It's not necessarily about humans suddenly not needing a job. It's about refocusing humans, reappointing humans to, I guess, the more value-added piece.
Yeah, look, this is an uncomfortable question, isn't it? I certainly feel that. And I don't want to oversimplify or trivialize it in any way. The reality is that technology has always displaced jobs to some extent, right? For the last 200 years, really. And in that respect, AI isn't any different. The concerning thing here is the pace at which it's happening. But I certainly am relatively optimistic on this. There will clearly be some job displacement, but I also think that the opportunity creation is going to be larger than the job displacement. But the thing that we need to get right then is these financial institutions reskilling and repurposing their people in the best way that they can to get the best unlock. Like we see that across the tech sector, actually. I don't know if you saw Benioff's speech on this a few weeks ago around his approach at Salesforce. One of the things that stood out to me, Salesforce have reduced by 50% the number of service queries they need to send to humans. That means he needs 50% less people in his service centers, which is a large amount of people. Yeah. He's not talking about removing them. He's repurposing them internally into other opportunities that he has that have previously been underserved, or he wasn't able to build a business case to serve previously.
Of course.
And the same thing is going to happen within financial services. I also think that, coming back to a point I mentioned earlier, when financial institutions are going to have a choice in front of them with what do they do with this productivity that's been liberated, right? Just to simplify it, 100 people now can do the work of 200 people previously. So where do they put these? Where do they put these other 100 people? Do they just take the cost out? Well, that would be job displacement. That's the downside that we're all concerned about.
Yeah.
Or do they repurpose at least a good proportion of that to enrich and improve, and reinvest it in the top line rather than just take it out of the cost line?
Yeah.
I personally think, and that latter story is what we mean by augmentation, right? Not automation. I think that's going to be the right move to go. And actually, in many of the conversations that I'm having, that's how I'm seeing these financial institutions talk about it. Yeah. But one thing's certain, this isn't going to be uniform across the whole industry. There are going to be different strategies taken by different institutions.
Yeah, there is something else just to build on top of that, Ben, because it's a very good point, is that this job displacement or replacement has been happening in the digital transformation in a way where banks were reducing their operational costs and closing branches because of digitization. Yep. But the problem that had was that actually they were hiring engineers because they had the technical skills, and actually they were firing people at the branches because you couldn't take a person from the branch, even if they were really good, and then get them to actually be a senior engineer. The good thing with generative AI is that actually technical knowledge is less of a barrier. So actually in these new jobs that will start, prompt engineering being a very good example of a new job, prompt engineering doesn't require any coding skills. It requires you to be a clever, analytical person that can explain in good language what you want the model to do, the LLM to do for you. So actually, you could take a really clever person from a branch and cross-train them to become a prompt engineer, whereas you couldn't really easily cross-train them to become a Java engineer. And I think we need to be thinking about that ability for people that actually are open to change and want to learn new things. I think this will open up a whole new world of opportunities that they never really thought was in front of them.
And there's hope for me yet then.
Yeah.
So look, I want to turn attention to, I guess, more of the outlook and the future of where we're going to go. And it'd be remiss of me not to mention the government's UK operational action plan. So maybe spend a minute, guys, just giving your views on that plan. But Ben, I'll start with yourself.
My overall sentiment is one of optimism. I think it was a really strong announcement. I think they adopted the number of almost all the recommendations that were made to them. I think that's a great thing. But I don't want to be a pessimist, but it is also just the start. And actually, the really encouraging thing is that we've seen the real focus on innovation first as a mindset, and particularly this sort of scan, pilot, scale ethos that they underlined. They reiterated that a few times in the announcement. The reason I was really intrigued by that is because actually what you're seeing there is the government trying to start behaving like some of the enterprises do, because that's ultimately what the enterprises have been doing. They've been scanning, they've been pilot a section of them, and then they've been scaling the ones that work. And actually the ethos, the mindset was, for me, the mindset signal was as material as some of the the detailed announcements around these innovation hubs and the investments. But I do actually think it's just the start. We need to do more. To assume that we've now got this sort of government agenda defined and set there, and it's all going to look be nicely wrapped up, I think would be slightly naive. But there was some really positive announcements.
I mean, I completely agree. I think the big numbers around investment in data centers and manufacturing AI, I think, to me, are probably less important than this big shift that is happening from going AI safety first to this balanced view between opportunity and risk. And I think that's the main comment that I heard a number of times being made by the new government, which was, okay, Rishi Sunak was mainly focusing on AI safety, and he did his AI safety summit, and everything was, we have to make sure that it is safe before we do anything. They're moving from that to we realizing that in order to actually make progress in this area, we have to accept a level of risk. We need to make sure that whatever we do it in a responsible and safe way, but it is a balanced way forward. And I think that opens up a lot more progress that we can make in this country, both with creating new AI and new models, which is what the government seems to be mainly focusing on, but I would say more in how we use everything that the world is creating, from DeepSeek over in China to all of the OpenAI and everything else that is coming on from the US.
And I guess, Ben, how do you see this act influencing the world of financial institutions?
Well, I think actually it's validated their mandate to continue with the agenda that they have been shaping. I think they have seen in this that they are going to get enhanced government support, both at an infrastructure level, but also just from the government giving their blessing, and that's going to trickle through to how the FCA operates and the regulation that they continue to issue in the future about this. So as much as anything, I see it about a validation. This is a green light. Proceed with your AI agenda with our blessing. Crack on. Which I think is not trivial, is not insignificant, because when these financial institutions now start weighing up the cost-benefit analysis of some of the infrastructure investments and some of the projects they want to pilot, they're now going to look at it with greater confidence that they're going to have the green light and the support of the SCA and the government when it comes down the line. And I think probably that is amongst the most material things from this.
I mean, I was going to also say, we're talking about the main AI government plan, but a lot of what is happening within the FCA is even more encouraging, specifically for financial services, right? So Colin Payne, who is the new head of innovation, has been talking about this a lot, and they've created this new AI lab that has got a number of initiatives, including the AI Spotlight, the AI Sprint, and all of those kind of initiatives, and the people that participate in them, and the profile that they raise about both the opportunities and the risks so early on in their adoption, I think are very positive. Yeah, we talked about a number of times where we're talking about too early or too late, but it's 2 years after the inflection moment. And I was working with a very large bank 4 years after the iPhone was introduced, and we were still debating whether people will be using a mobile to do their banking. So we are going very fast, and that is positive, but there is so much more that we can do.
It is amazing to see how the speed of which technology has been used in banking. You just mentioned mobile banking. I can remember the days before mobile banking, but I guess I want to give you both a magic ball right now, and I want to get your views on, I guess, the horizon of AI now, and where we see that in the next, it seems too much, 10 years, or maybe bring it down to the next 2 to 3 years. Ben, start with you.
Yeah, look, great question. One thing's for certain, AI's deployment within financial services since the 2022 inflection moment, I think, is the most disruptive moment in financial services since 2008. The positive news is that this has the potential to be disruptive on the upside, not the downside. If I was to try and fast forward 2 or 3 years, and it's useless to try and do longer than that given the pace at which this is moving, some of the things I'm relatively confident in, AI will become as proliferated and as standardized across the market as cloud and SaaS, if not more. That doesn't mean it's all going to be used in the same way or jobs going to be done, but it will become a standard core tool. I think we will see some strong enhancement in the profitability of financial institutions, but there are going to be winners and losers. There always are, and actually something moving at this pace is only going to exacerbate the dispersion that we see there between winners and losers. And I think actually we're going to see a big shake-up in the technology sector as well within financial services, because I talked a moment ago about the Agentic AI. What we're going to be seeing is these agents are going to start being the engagement layer for the employees and the workforces within these banks. And these agents are going to be going into other systems to collect information and data and come back out and complete the task and provide it back to the workforce. So what happens to all of these solutions today that own the workflow screens, that are workflow platforms, that the bank's workforce are currently using? And I think there's going to be a big shake-up in the technology sector as well in that sense, because there are going to be winners and losers with the banks. There are going to be winners and losers in the technology side serving the banks as well.
Yeah, and I mean, 100%. I think that's the interesting point in there that Satya Nadella was making about SaaS is dead because of, an agents are coming. In reality, what are agents? Agents are robots, right? They are robots that are not physical, but they are software robots that actually make a lot of your work. And I think the reality will be that as you're moving from software as a service to effectively agent as a service, what you're actually moving from is a company buying software services from a fintech to a company buying a robotic agentic service that is closer to outsourcing in the way that banks have been seeing it in the last number of years, right? So basically, you're buying digital, automated outsourcing services where a company is not just selling you software for your employees to serve your customers, but is actually selling you something that is agentic and therefore acts in the same way that you are outsourcing your back office maintenance processes to them. And I think that to me is the new age that we're seeing, is these new companies that will, or transformed companies that will start to serve banks, that will actually be offering them agents as a service that is going to be very different. I think some companies will manage to evolve and move from themselves from SaaS to agent as a service, but there will be new companies that will be jumping into the fray like that, and then the banks themselves can also do a lot of that.
Yeah, I think where I see it, I think banks will hone in on 3 to 5 really key use cases, and will adopt that really quickly and try and be one of those winners, Ben. Because I think AI has been on the agenda for such a long time now. It's like being thirsty and being told to go and drink from the ocean. It's vast, it's deep, it's wide. You're going to end up drowning. I think what banks are now taking this approach of, I'd rather just have a bottle of water. I can read on it exactly what's in it, how to drink it, the safety measures, and when I'm happy, I just put the cap back on and stick it on the shelf, and I'll grab the next one when I'm thirsty again. And that's the approach I see them take, certainly in the short term. Origination's going to be, I think, absolutely key. Everybody's striving for that time to money, that customer experience, and I think that's where banks will hone in on. But then certainly the back office piece around engineering, testing, AI is going to play a massive role in that piece as well. So
the other thing, I mean, we alluded to it, but let's unpack it a bit more. Technology, we've said for a while now, enables attacker organizations to scale quickly and start eating some of the edges of these, the established tier 1 organizations. And you sort of have seen gradual, consistent dissemination of the disaggregation of the value chain within banking over the last few years. The AI is going to accelerate that further, because it now makes it possible for smaller organizations to scale their complex operations at an even quicker rate than they have been doing before. So actually, this potentially could lead to more consolidation within the market, because these large organizations will buy more of these smaller attacker organizations, because actually this makes them more of a threat, not less. So you see the defensive plays on the big organizations investing in 3,000 engineers, but you will also see other movements within the market, materializing as well.
Yeah, and I mean, Sam Altman talked about the one-person unicorn. Again, I don't know how far away from that we are, but the reality of how much faster and more efficiently you could go when you're starting greenfield, like our companies are, compared to the established players, even if they are the fintechs or the established banks, is very different.
Yeah.
If you think about what happened to the banking sector, was that some of the fintechs that started 10 years ago with the efficiencies of cloud and digitization from the beginning, Revolut being probably the best example in Europe about that, they saw those companies scale much faster, much quicker in multiple countries. Revolut's last valuation made it bigger than Lloyds Banking Group in the UK, because they have so much greater cost efficiency and they have the ability to scale because they were digital first. Companies that actually are now Gen AI first will have, I think, 10 times that level of efficiency, because it's not just about digitization and how they approach customers, it's also about how they scale everything else in a fully automated way. Yeah. And therefore, what would happen if a new bank starts now following the Revolut example, and it's 10 times more efficient than Revolut in 5 years' time?
Yeah.
You can see significant challenges again going in, plus some of the Revolut themselves perhaps, and others will also make that transition faster than perhaps some of the bigger banks. But I agree with you, Ben. I think the bigger banks generally understand this now much better, because they've seen the digital revolution happening, and because they've invested a lot in digital and AI anyway. I think it's the mid-tier that were protected somehow, but actually now I think will be very much like whether you're talking about number of regional banks, building societies, they're still there, and they kind of plowed on and made it through this last revolution. I think this next one will be extremely challenging for them, and I think they are the ones that need to be very mindful of. They cannot be followers. Up until now, they've always gone, I'll follow later on because it's fine. This time, they have to move much faster. I don't think they're used in doing that as much as the bigger ones.
Yeah.
Do you know, Michael, I'm seeing that. That's what's so exciting about this as well. I agree with that entirely, but I also think that That sector of the banking pyramid is always the most challenged, the squeeze middle, right? But they are really waking up to it.
Great.
This is why there's so many exciting conversations in the market at the moment around the potential of this technology, because they're realizing that something that was a multi-year, tens of millions transformation program in the past that was like their one bet that they got to use every 3 years, they can do that and a couple of other things now.
Yeah, and that is amazing. And I think, in reality, for all three of us in our companies, right, that ability to then help those ones become as big as the banks that we all worked for and compete against them, but in a much lower cost than perhaps before they could never even afford to do so, I think is where both the risk and the opportunity might be.
Thanks for the sales pitch. Appreciate it. Look, guys, time is up. So, I mean, much like AI being an ocean of a subject, I've got to put the cap on the bottle and put it back on the shelf. So, last, I just want to say thank you both for coming and being here. I hope you enjoyed the experience. We could speak for hours more about this subject, but maybe for the next one. So, Michael, Ben, thank you very much.
Thank you for having us.
Thank you very much for having us.